Good day, students. So, we'll be starting off with Unit 4, which talks about customers and account holders. I'll try to cover this chapter within one or at the max 2 lectures. Okay, so let's get started. So, firstly, what are the different types of accounts that can be opened in a bank? I'm very sure you are aware of it. You must have done this in your 11th or 12th standard, but let's go through it again. So some of the accounts that can be opened in a bank, they include current account, savings account, the recurring deposit account or RD account, and fixed deposit account. So what is a current account? Current account is mainly opened by business people, and the deposits made by them are liquid deposits, and there are no limits on the number of transactions that they can perform on their account in a single day. However, there is no interest paid on the amount held in this account, or very, very low interest is paid. It depends on the bank. And bank charges or service charges are levied on operation of this account. However, one good advantage is overdraft facility is extended to current account holders. Okay. Moving on, the next is savings account, which is the most common type of account, and it is meant for savings purpose. So any individual, either single or jointly, can open an account. Mostly salaried people or pensioners or students use savings account. Banks do pay a nominal interest on the savings account, and there is no as such restriction on how much amount you can deposit in the savings account. And generally, savings account holders can withdraw amount without much restriction. But if the account holder goes to an ATM and tries to withdraw amount, then there could be some restrictions on how much he can withdraw per day. And the rate of interest is generally around 4 to 6% in India. And some banks will insist on maintaining a minimum amount in this account to keep it functional. The next type of account is recurring deposit account or RD account. This is opened by those who want to save a certain sum of money regularly for a certain period of time. And this also helps them get a higher interest rate. So in this, what happens is every month a fixed amount is deposited with the bank, and this deposit on a monthly basis continues for a specific period of time, say for 6 months, or maybe it can be max up to 10 years. And the interest rate will also vary depending on what the plan is, and depending on the time period chosen by the depositor, and also what the bank is able to offer. Withdrawals are definitely not allowed, but bank might allow closing of this account before the maturity period, and there could be some penalty clause for doing so. Okay. Then the other type of account is fixed deposit accounts or FD accounts. In this, a particular sum of money is deposited and locked up with the bank for a specific period of time. This usually fetches a higher interest rate, and the money deposited cannot be withdrawn before the expiry period. And in case there is a need to do so, then there is a penalty clause and the customer has to abide by it. Moving on. What are the steps for opening a bank account? So the general steps are, the first is choosing a bank. So research about the bank which are there in the area is a must, and one can also choose a bank based on the services they offer and the customer's own financial needs. So all these things have to be checked. The next step is visit the bank or at least go through the website. So once you have decided in which bank you want to open an account, do visit the bank during the banking hours along with the initial documents, and also go through the website to know what services they offer and if there are some clauses that you should be aware of. Then choose your bank product. So what is the kind of account you want to open with the bank? So whether it is current account, savings account, so all these things you have to consider and choose a bank accordingly. Uh, then provide documents and other information. So after a bank has been selected, one needs to fill up the account opening form and also the KYC form, know your customer form, along with the photograph. Usually while opening an account, an address proof, an identity proof, and generally 4 photographs are required. These days, Aadhaar has been made mandatory, so Aadhaar serves the purpose of both an address proof or an identity proof. And references might have to be given, so that's the next step. So the banks normally will require references or introduction from an existing customer or account holder. And post that, there are certain terms and conditions to which the customer has to agree. So one has to go through the terms and conditions and sign accordingly. And the next step is deposit the initial amount in newly opened account. So after getting the proposal form cleared, the necessary amount is deposited in the bank. So after depositing the initial amount, the bank provides a passbook. So passbook gives the status of your account. Then a checkbook which you can use, which is a negotiable instrument, and a pay-in slip book in case of savings account. So these 3 are given. In case of fixed deposit, a fixed deposit receipt is issued. In case of current account, a checkbook and a pay-in slip book is issued. And for recurring deposit accounts, a passbook and a pay-in slip book is issued. Okay, now while this is a normal procedure for any general opening of account, there are certain special accounts for which the bank exercises some special precaution. So let's quickly understand that. For a minor, so minor is a person who has not attained the age of 18. Okay, so for a minor, details of guardian and birth certificate of a minor will be needed, and they will also ask specifically about who will operate the account. For a married woman, generally, if it is a joint account with the husband, clarity will be required as to who will operate the account. And for a woman in Parda, additional attestation from a responsible person is required while opening an account. Then for joint account, application for opening an account must be signed by all the persons who are part of the joint account, and details of who will operate the account will also be required. In case of partnership firms, when they open an account with the bank, the account can be opened either in the names of all the partners or the firm itself. Bankers should review the partnership deed in case it is opened in the name of the firm. And banks should prefer that all the partners should be present at the time of account opening, and specific signature of each and every partner is also requested. And there is also a partnership letter which is required, and it has a signature of all partners. It has names and addresses of all partners, the nature of business that is carried out by the firm, and also it gives the details of persons who are authorized to operate the account on behalf of the firm. Moving on, the next is for a joint stock company. When an account is open, the banker goes through documents like certificate of incorporation, certificate of commencement of business, memorandum of association or MOA, articles of association, the prospectus, and so on. Banks need a copy of all of this for record and reference, and banks should also get a certified copy of the resolution passed by the board of directors along with the application while they place a request for account opening. So generally, a resolution is passed by the board of directors that they would like to open an account at this bank for whatever purpose. Now, the resolution will contain information about appointment of the banker of the company, authorized persons who will operate the account, and authorized persons to execute documents on behalf of the company. Now, there are other organizations like non-trading organization, like a society. Okay, so banker should ensure applicant society is properly incorporated either under the Societies Registration Act or Companies Act or Cooperative Societies Act. So other examples are your trust or your religious organization. So when they open an account, so they have to be properly registered. Okay, a copy of the society's own constitution or charter or memorandum of association or bylaws is requested, and a copy of resolution passed by the managing committee of the society to indicate the bank concerned as banker will be the banker for the society will also be required. So all these copies are required. Then the other unique types of customers would be Hindu undivided family. So this is again a legal entity, and usually this is executed by the Karta or the head of the family, who is the main executor. Usually for opening an account, it must be executed by Karta and by all the other major co-partners in their personal capacity to make them liable. Okay, so it is more like a joint account where all of them who are involved must be involved while opening the account. An instruction on opening account must be obtained in writing. The last is executor or administrator. See, usually this is not for opening an account, but what happens is executor is a person who has been granted the execution power to take care of the property of a deceased person, and the deceased person has willed that this person will be handling all these dealings on his behalf. So that is the executor. So banks have to be also careful when an executor approaches them, and they should ask for a copy of the will. Okay, and the copy which is attested by the court. And then the other category in case of deceased person would be an administrator. So administrator is usually appointed by the court to take care of the property of the deceased person, especially when the deceased person has not left a will. The court appoints an administrator who is usually a close relative of the person. So banks, again, in case an administrator approaches them, he is required to produce a letter of administration. So this is all in case they want to operate the account of a deceased person. Okay. Now moving on. The next topic is KYC, or Know Your Customer. So KYC is a means of identifying and verifying the identity of the customer. So it is to understand the customer better, and this is done through independent and reliable source. Documents are asked for, data and information and background verification is done about the customer. For this purpose, the individuals will have to submit a few documents, including identity proof, address proof, and recent photographs. Now, why do we need a KYC? This has become a very popular instrument in the last couple of decades. But why do we need it? So KYC is basically an anti-money laundering device. So in order to avoid suspicious accounts, KYC guidelines have been prescribed, and according to this, banks have to obtain documents and also verify the details about the customer at the time of opening an account. Okay. So why has this become very important in banking sector? Various reasons. See, there are people who earn extremely well, but that attracts high income tax. So many a times they open an account with the bank, and also they perform high value transactions in cash, which stays undetected from government's tax collection agencies. So the individuals use banks to clean their money with money laundering tactics. So what happens is results in loss of revenue and eventually hinder the growth of economy. So for high income earning individuals who don't declare their income properly, KYC is required. Then, of course, if the source of funds, the next category is the source of funds that is deposited with the bank is illegal. People may use money laundering tactics to make the illegally obtained money legal. So even for that, verification about the customer is needed. So KYC helps. Then of course there are undetected money earned out of criminal activities or that can fund terror funding or similar activities. So it compromises national security. So even for that, banks have to know who their customers are. Performing KYC also ensures compliance to regulatory requirements and facilitates a standard and easy onboarding process for new clients. So it's very easy for the banks because at least they know whom they are dealing with. And once KYC is done, it results in higher level of trust between the banker and the customers. It helps in efficient monitoring of the customer behavior as per risk profile and standardization of customer identification and authentication. Okay. So with this, we will take up the last topic, which talks about specifically about special accounts in part 2 of the lecture. Thank you so much.